I wish it could be like this forever. Nope. I need to wake up. I've got a show to do. Today, I'm going to tell you 4 UK dividend companies which are severely undervalued, which you should consider for your stocks and shares portfolio. I'm actually looking at this very, very closely, and this 4 I'm going to speak about today will help you on your investment journey. So stick with me. Let me enjoy the sun a bit more before I begin. Welcome back to my video. My name is Dr. Alex Koh, and welcome to my YouTube channel, UK Family Investments. I'm making investing easy for all you guys to help your family grow that nest. And hopefully you all will get rich. That's the whole goal, and I will get rich at the same time walking through this journey. So thank you for coming. Thank you for joining. I've got my book ready. I've got my notes here. I'm going to present to you 4 UK dividend companies which are severely undervalued. What? And I'm honest, I'm actually looking at this. In fact, I've already put money in these 2 companies, 2 out of 4, and I'm looking next week to monitor how it goes, and I'm going to put money further into investing great quality companies. That's all investing is about. Investing is great quality companies. Plenty of companies have got their dividends suspended for the year. Banks, for example, insurances company, industrial companies, a lot of companies have got their dividends suspended. They're not paying any dividends this year because they need to keep the cash flow to help the country, to help the economy, to help customers and clients who are struggling through this coronavirus saga. Company number 1 is a biotech company, an old company that's worth £81 billion. It's one of the top 4 largest cap company. Okay, I'll tell it to you now. Be patient. It's called GSK, GlaxoSmithKline. I've also recommended this company in my top 5 favorite dividend stocks back in the beginning of the year. Check out the video here. And now GSK, I think it's severely undervalued. Undervalued by about how much? 15%. Is that a lot? Yes, for GSK, it's a lot. GSK is one of those companies that don't really grow because they keep paying dividends 4 times a year. Normally, they'll be paying dividends about 3.5% to 4%. But because they have dropped about 15%, they're paying around about 5.1% dividend just now. So GSK, it did drop from an average of 17 to 18 bucks. That's where they hover for the last 2 years, 3 years. And they dropped to almost £14 pounds. And now they're back up to 15. And then when I look into the details, GSK, the 6th largest biotech company, also with consumer health, pharmaceutical, they're involved in trying to find a vaccine for coronavirus, COVID-19. They're also there because they sell products like toothpaste, vitamins. If you notice, oranges has gone through the roof for commodities because a lot of people are buying vitamins to stock up in the house through this coronavirus to keep their immune system in boost. And Panadol, painkillers, protein shakes, these are some of the pandemic survival kit, the things that people rush and buy. Panadol, because if you do get hit by coronavirus, you have to stay indoors, isolate yourself. If you have a fever, paracetamol is what you need to get yourself through. And if not, then you have to go to hospital 7 days later. So they have products, immune booster system products. I don't see the reason why GSK should be dropping to 15 pounds. So personally, I've bought for dividends, good quality, long-term growth. And if they do fall again at GSK, you know what I'm going to do? I'm just going to buy more. Okay, number two, same envelope as GSK. Also a dividend company, still not suspended. Company that's doing really well through this pandemic. It's Unilever. Also my top 5 dividend companies of 2020, and now severely undervalued by about 20%. Dividends are not being suspended for now. P ratio has dropped to about 18. Normally they'd be hovering about 24, but they dropped to 18 P ratio, under 20. This is crazy. They are different from GSK. They are more consumer health product. They're not biotech. They're more consumer product for health. Lots of vitamins. They do lots of cleaning products. They do lots of hand sanitizer, cleaning, and they also donated 600 million to help the coronavirus AIDS. That means that they're not struggling with cash flow there. If they're willing to dish out 600 million to help the coronavirus, they're not struggling with money. No dividend cuts. And Unilever, same envelope as GSK. I don't understand why they should be dropping. And you should consider this. Look at this bargain, good quality companies, GSK and Unilever. Buy when they're low. If they go low, buy again. Dividends to collect 4 times a year for these 2 companies. Pandemic proof. I'll call them pandemic proof. They are a company where you buy the product. If you're looking for a commission-free, low-cost UK ISA stocks and shares trading broker, then I recommend you Trading 212. Click on the link below. I've joined it. You can buy fractional shares. It's easy to buy, easy to use app for beginners, and also advanced trending tools that you're looking for. So click on the link below and join me now at Trading 212. Really, really good. See you soon. Okay, number 3. Company is an industrial company called RollsRoyce. I'm sure you know about Rolls-Royce cars, but the real Rolls-Royce profit patent in Rolls-Royce are their engines. Engines and Boeing plane, the RB211. They have got loads of engines offshore, driving turbines, driving generators, turbines and jet engines for planes. You've got your SpaceX, rockets flying up to space. They all have either Rolls-Royce engine or GE engine. Honestly, not many companies in the world can produce luxurious state-of-the-art engineering like Rolls-Royce. The other competitor that I know is GE, General Electric. So Rolls-Royce sitting at £3.20. They did drop as low as £2.50. They've been dropping from 10, 8, 6, 4, now at 3. And honestly, they're really cheap. I'm worried sometimes that I might wake up seeing that Rolls-Royce being bought out by the Chinese or the Great Middle East, rich prince. I'm quite pro-UK. I want to keep our own brand and patent. But sometimes when these companies go really cheap, they might be bought out. And Rolls-Royce is a brand. It's a company that's been built over hundreds of years. And, plenty to talk about. Too cheap. They're not paying dividends, but they only employ really great engineers. Engineers from Cambridge, Oxford, Imperial into the design squad. I've known people who have worked in Rolls-Royce and then became professional lecturers at universities. Where in my universities, they produce lots of simulation tools, kit on how, they sponsor projects on helicopter flying. And also, they're part of UK's ventilator challenge, where they have been tasked to stop the production line and confident to produce lots of ventilators for the NHS in the UK. So whenever there's a big government tender, Rolls-Royce are always being invited for this specialist engineering. Rolls-Royce, it's a huge brand. The other brand that I can think of made in the UK, great engineering, is Dyson. But Dyson is never public, and Richard Dyson moved away to Singapore. I don't think Dyson's British anymore. So Rolls-Royce, great British company, too cheap, and potential, but 2.5. And now my 4th and final choice of my undervalued dividend UK companies is a bank, financial sector, a bank. Yes, it was a hard choice, but I've made my hard decision. It's Barclays Bank. I may have spoken on my last video, but I'm going to tell you more details. Barclays Bank. Barclays Bank dropped to under £1. Nominal share price is about £2 to £3, but they've dropped under £1. As soon as they suspended the dividend, instructed by the government, by the central banks, to stop the dividends, to keep cash flow, to help clients, the share price just plummeted all the way to 80 pence. If a bit more, you could hit the financial crisis where they were about 60 pence. Barclays is really, really cheap just now for a very specific reason, because of the coronavirus. That's why Barclays is cheap. And even when they suspended dividend, the CEO actually came out and said that they had money to pay their shareholders. They're not willing to suspend it, but because they got twisted, their arms got twisted around the neck, and therefore they had to follow suit to help the general public, to help the government. That's why they cancelled their dividends. So Barclays, out of the top 5 banks in the UK, I think Barclays is not the well-balanced one. So Barclays against Lloyds, I think they have better diversity. Barclays have got investment platform across in the US. Barclays is quite big in the US as an investment bank rather than a retail bank in the UK. And compared to HSBC, Barclays has got less debt and less liability. HSBC has got problems with the debt, high expense and the liability. But Barclays has seemed to have it a bit more under control compared to HSBC. And they're slightly better than Standard Chartered in terms of growth. Standard Chartered has always played safe. But I think Barclays are willing to go the additional step with the investment platform, not on insurances, and also expanding to overseas, like a great market in America. So Barclays is better compared to the rest. So I hope you've enjoyed that the presentation on 4 UK dividend companies which are severely undervalued, which you could consider to put on your portfolio. Personally, I've got 2 out of 4, quite a bit, and already I've been buying as they were going down and buying as they were low. I'm also monitoring the other 2 as well, just to diversify a bit, just to support the British companies, British big brands. So if you do like this video, please do subscribe. I'm going to share stuff like this every time, and you can follow me on my Facebook channel, which I share immediate information really quickly. Links up here, Momoku UK. And hopefully to see you soon, and leave any comments below if you've got anything that's undervalued that you would like to share with me and everyone who's on this watching this video as well. Okay, take care. I'm going to go back to my sunbathing just now and just relax. See you later. Bye.